what do you see as enabling that growth narrative again moving forward? Do you see it's adult use certain markets, certain things that you guys are already doing internally? Like, what do you see as bringing that narrative and kind of the win back into the sales and maintaining that growth story?
Hey everyone, thanks for checking into our latest TDR Cannabis exclusive. Big earnings week this week, covering all the big MSOs in the space, including one specific company had a great report, Verano, and we thought, why not bring in somebody from the company? That's exactly what we're doing today as we bring in the Chief Investment Officer, Aaron Miles, back to the podcast. Good to see you, sir.
It's good to see you too, Shad.
Appreciate it. Anthony Varell joins us as usual. Anthony, good to see you.
How's it going?
Not bad. It's been a busy week, obviously covering a lot of these companies. But Aaron, good to see you. We talked Verano. Happy with what's transpired and what you guys released this week?
Yeah, extremely happy. We reported first. We felt we really set the tone for the cannabis earnings season. 234 on the top line, 3% sequential growth, up 5% year over year. 31% adjusted EBITDA margins, which, to date right now is tops in the space. But more importantly, it's the management of the cash in the balance sheet. Our cash increased to $103 million. Our income tax payable, which has been, a little bit of a question, mark that we had and people do push back on, went from 248 to 227. Our acquisition consideration payable went down 16 million to 2 million. And, we're just appropriately managing the balance sheet. And by the way, we not only, revised our free cash flow guidance range, but it's also tops in. So we brought the bottom end of the range up to 65 million, top end of the range is 75 million. So, we're managing through. I think, one of the biggest misconceptions in the space is that we just continue to defer taxes. So people are like, well, no doubt you guys are going to, be able to hit free cash flow, but that's not the case. And, we quantified it, on our Q1 call that, 280E is going to cost us $100+ million in 2022. So you think through, We're managing through that. We're managing through, some of the, the cash payments that we had. We're putting up 31% margins. We're growing the top line. And oh, by the way, Maryland just turned on rec, and we're also positioned extremely well in PA, Ohio, Florida for when those markets turn on as well. So, it's no time to jump up and down. We're not patting ourselves in the back, but we're pleased with what we're doing, and the strategy that we put in place is really resonating.
Yeah, but with cannabis, with cannabis being considered a growth sector, I mean, obviously a lot. You guys posted first. You came in line. Metrics are great. What do you see as enabling that growth narrative again moving forward? Do you see it's adult use certain markets, certain things that you guys are already doing internally? Like, what do you see as bringing that narrative and kind of the win back into the sales and maintaining that growth story?
Yeah, listen, you're fighting for every dollar. And you look at a state like Illinois, the pricing compression in that state outpaced our wholesale decline. So you think about that, like we are, operating, our wholesale was down, 10%. The pricing, decline was much higher than that.
Yeah.
Our retail sales were down 7%. So again, you're not patting yourself on the back for a decline in sales, but there's 20% more, stores open in the state since the beginning of the year. So you're fighting for every dollar and you're protecting your moat. And then you're also positioning yourself ahead of, the Connecticut turn on and the Maryland turn on, right? Like we were a leader in the Illinois market. Like we kept the market afloat in 2020 when that market turned on. You look at Connecticut, we have a 217,000 square foot cultivation facility. I mean, you can virtually put all the other cultivation facilities in ours and we'd still have room left over. So we have a knack of really staying a step ahead of growth. And so I think it all is this combination, right? And then, oh, by the way, you're very much operating your business as efficiently as you can. So we're pulling back on inventory, costs are going to start coming down. You can anticipate, a little bit of a boost to margins, once you really get that cost containment under control. But we take nothing for granted. And tomorrow is a completely different day. And you got to, wipe off the dust and go right back and battle for another dollar. And that's the mentality that we have every day.
Yeah.
Yep. And I mean, I'm down in Florida. So, I mean, I obviously see moves everywhere. I know that you guys are second in the state as far as retail locations go. What's your take on Florida? I mean, what is it looking like? I guess health of consumer, product mix. I mean, are you seeing price compression or battle from the consumer from a pricing perspective, or are you kind of maintaining that share against the likes of like True Leaf, despite some of the trends I guess we're seeing with like Jungle Boys, Cookies, and the West Coast brands starting to come in, even though they hail in comparison to your market share from a retail perspective?
Yeah, people make headlines and efficient. We make money. So, if you look at it, the OMC report puts out, the grams sold, but what it doesn't show is the dollars behind that. So we do discount, but we, practice irrational pricing. All of our stuff is indoor. And I don't know if you sample some of the different product down there, but, we'll put our product. Yeah.
Your flower's good.
Yeah. So we'll put it up against anybody. We're continuing to adapt and evolve our product portfolio, which we can touch on here as a whole from a nationwide perspective. But Florida's a market that it plays a significant role for us, and it's a time, an inflection point where we're kind of waiting to see what adult use is going to look like. If it gets on the ballot, it passes, but it's getting on the ballot that's going to be the challenge, and there's been a lot of pushback, but. I guess if you look at us right now, and this is kind of an odd, example or relation, but like we look at ourselves as Nordstrom, right? Like Nordstrom can sell khakis for $90. Walmart can't sell khakis for $90. They can sell it for $35 or $40, but we can sell our khakis for $40 if we wanted to. So we've always operated from the premium price point, and then any variation of our product is always going to have that same genetics and the premium quality. So when we roll out a value or a mid-tier brand, I would put that up against most people's premium. And so, that's the reputation that we have in the market, and that resonates into, the margin profile. And, one thing that we quantify it on the call, but we did have an inventory impact, some of that back in the quarter. So those 31% margins, adjusted EBITDA margins, actually include the impact from that inventory pullback. So, listen, as I said, I mean, we fight for every dollar. And, for me, even internally, I wish you could see some of the battles I have to go through with George to try to get dollars spent. But, we have one-ply toilet paper and our paper towels disintegrating in our hands. I mean, we pretty soon we're going to have to start going out and using a garden hose to wash our hands.
There's a headliner right there, right? The reason Verano is excelling.
I joke, but I mean, we really do look at everything we spend, and that's no joke. So,
I can say from firsthand account, the retail locations do look like a Nordstrom inside. They are quite sharp looking retail locations.
Well, you know what it is, and this is the legit truth. They're going to judge me based on this conversation, and people who watch this are going to judge us based on this conversation. And we have the same mentality, no matter what we do from a Verano perspective. So when you go into a Zen Leaf store outside of Florida or the Move stores down there, we want to make sure that experience is consistent, because that brings customers back. You have, the number of views, consistency, pricing's on point, but being greeted and having bud tenders that really know what they're doing, it's going to bring you back. And the experience has to be consistent, and again, that resonated from George and his whole operational and restaurant background.
Interesting. Well, we look at the Move dispensary locations you added in the state of Florida to Zephyr Hills. Am I pronouncing that correctly? Zephyr Hills?
Yeah, I believe so. Yeah.
Where is Zephyr Hills, Florida? There's a trivia.
It's over by Tampa.
Okay, Miami, Venice, and Fort Pierce as well, which raised your company total footprint to 70 storefront statewide, I should say. So by all accounts, you seem to be performing well in key segments when we look at the weekly Office of Medical Marijuana use updates. So saying that, Aaron, do you have the bandwidth and capacity to keep siphoning off market share within the state?
Absolutely. Yeah. We're very strategic in our locations. It's not just popping open a door, just to, continue to try to grab market share. And you look at it, I mean, you look at our strategy from across the board, right? A lot of people are just, discounting their product significantly just to grab market share, thinking that's going to resonate to future sales. It's just not going to. And so, we have the same mentality with our store openings. They have to be high quality and high trafficked areas. So everything is well thought out. I mean, I wish I could share the pipeline with you here to see, the planning that goes behind it. But our Florida market, it starts and it ends with John Tipton. He came over from AltMed, which was the acquisition we did in February of 21. And, he has stayed on because he wants to see this through to adult use turning on for Florida. And we're fortunate to have him stay on. And so when you look at what we're doing as a company, you have John Tipton moving to the president of the southern region, and he moved up to a board seat. Darren Weiss, who has held a number of positions at our company, moved into the president role, and then you saw Trip McDermott go to COO, and David Spreckman go to CMO, and Laura Kelsnick go to GC and Chief Legal Officer. Our bench is deep, and we are continuing to develop and fine tune our capabilities, which allows us to absorb, a lot of the work and the bandwidth that's going to be associated with those moves.
Something that I found interesting this week too, I was on the earnings call with Kim Rivers from Trulieve, and she was saying that the rec market in Florida estimated to be $6 billion. Huge opportunity, right?
It's massive. You look at Florida for us, right? I mean, Trulieve is the top operator in the space for good reason, and Kim has put a lot of time and effort into the state, and I think anyone on their own is going to catch Trulieve. So I think it's all fighting for it to be a quality 3 in the state. But even for us in the position we're in, I mean, Florida alone could be a solid business, and so that's why I think we are positioning ourselves so well. In Tampa, right outside of Tampa in Apollo Beach, we have a 220,000 square foot indoor facility. In Palatka, up by Jacksonville, we have a 42,000 square foot facility that can grow to hundreds of thousands of square feet. And so you start to think about what we've done. Now go back to Illinois, New Jersey, Connecticut, Maryland, and you can imagine ahead of adult use in a market that has that type of potential. We'll definitely be ahead of that.
We also saw some numbers this week too. State of Michigan seems to be back. Wow, they had some pretty strong numbers in that state too. But another thing we want.
Interesting state, and it's not just because I grew up there, right? But we have a store on the southwest side in Buchanan, and at one point it was just a nice addition, right? And it was a nice little storefront in downtown Buchanan, and we actually had to buy the location next door and bust through the walls. It's performing so well, and so we've always looked at Michigan. I mean, the name of our game is always to be vertically integrated, but I think there's an opportunity for that state to maybe consolidate a little bit more. I mean, it's a little bit fragmented, but the way the municipalities work are a little bit different, make it a little bit more licensed. But that's definitely a market that we're looking at. But for me personally, I go and do all the due diligence, and always catch a game or go visit family. But
yeah, for sure. Another thing we noted was that capital expenditures for the 6 months ending on June 30th, 2023 were $17 million, down from $87 million in the prior period. So something that we haven't necessarily seen to such a degree from other tier 1 operators, which was anticipated with the CapEx drawdown. So saying that, has the reduction of your CapEx cycle come earlier than, say, some of your competitors?
Well, competitors are actually trying to build out their footprints. So look at Connecticut, go back to that comment, the 217,000 square foot facility was appropriately built out ahead of adult use. So we have nothing missing in our product portfolio or from a cultivation perspective. So, PA, that was going to pick up steam, initially, and it was going to turn on in 24. Well, we have a 75,000 square foot building, a shell that's built, but we paused because we don't want to invest dollars in that and just sit on that investment and oversupply the market. And I think the theme across the board, and we've touched on that in calls, is we're shutting down supply in Illinois, not because we have to or we're trying to have a cost savings, but we don't want to flood the market. I mean, I think, people need to go back and look at supply demand economics and understand how they work. And I think we fully look at that and understand how to appropriately supply markets. So that said, the pullback wasn't out of need. It was out of that we just didn't see the growth opportunities, ahead of us. But, let's say Florida picks up steam, you will see that CapEx guidance go up because, we're going to invest heavily in that, PA, again, you're hearing 24 with a 25 turn on, but we will absolutely get ahead of that growth. But right now we're happy with where our footprint is cultivation wise. A lot of our CapEx, outside of around a $10 million maintenance CapEx is really associated with dispensaries, and we fine-tuned Maryland ahead of that adult use turn on, but we're really happy with where we're at. So I think as other operators get to the point of building out their footprint and getting into the states appropriately, I think you might see that pullback. But
I know that you guys have really stood behind the On the Rocks brand since launch through PRs, seen it everywhere. How's that selling through? And I mean, are you seeing the consumer gravitate more towards those products in your states versus flower, or are you seeing a maturation of the consumer?
Absolutely, they're off the shelves before they even get on there, and
really?
Think about it. High-end edible, right? Edibles were always it's like the chef's special back in the day. Like it was the leftover. You have your premium flower, and then you got your buds, and you got your shake, and then it was like, okay, everything left over is just going to go to distillate and into a $10 pack of gummies. And people who don't like to smoke weed, want a similar. So you do a solventless extraction, and you put high quality cannabis in it, and guess what? You're going to start to replicate or come pretty close to a very, very nice high, and people are now starting to consume higher end products. So On the Rocks, is just an example. We also have guap. Now, I personally have not tried these because they come in 25 and 50 milligrams. So I'd probably be high for about 3 months if I did. But I will tell you, what we're doing, and this is the biggest thing. So we have 13 brands now, and we have. I mean, I'm not going to walk you through every single one of them, but like you're starting to see more data coming in, right? So it's like in the investment world, I have a heavy hand in M&A. It would be like running a discounted cash flow analysis, but like not having any data to pump into your model. Well, now start building out your product portfolio and say, okay, what's the consumer going to want? Do they want watermelon, lemon? We don't know yet because you have that that data absorption. So for our balanced approach, we have 1 million plus square feet of cultivation in conjunction with 132 trees. We are now absorbing data. We have systems built, and now you're starting to see a massive amount of our sales come from new product launches. And the reason that's so key is because when you start talking about pricing compression, we're not selling the same G6 flower that we were selling back in 2017. We're evolving our strains, we're pulling out and new products, which you don't necessarily have to discount as heavily. So it does help from a pricing perspective. But we now have product from A to Z, value, mid-tier, premium flower. We now have, Holy Union, which is an infused pre-roll, which again, I would avoid because I think that's another stratosphere. But we now have a product for every consumer, and those will continue to evolve and adapt based off that.
Yeah.
And, On the Rocks is just an example of how we got ahead of that. And, let me go back here. We got dinged going public because people are like, your branding strategy is not strong enough. And we're like, but why would we invest in branding when we can put our stuff in a lunch bag and write G6 on it and sell it because it's premium and the supply wasn't necessarily strong. Right. Well, guess what? Always had a plan and a product portfolio rollout strategy. And now you're starting to see that resonate. And I think people are going, wait a minute. They had a really good idea with the premium because we didn't waste money, time, or effort on a product that was just going to sell on its own anyways. And that's why we were pumping out 40+% margins when we first went public. And so now you're starting to see that come down a little bit and you're starting to see our product portfolio evolve, but we'll always stay ahead of this growth.
And as far as product mix goes, I mean, I know that Tilray came out with that press release last week, picking up the 8 brands from AB InBev. And I mean, I'm a firm believer that a huge part of this industry moving forward is going to be beverage. You're going to see it at athletic events, concerts, etc. I mean, what's your take on beverage? I mean, you think it could be as big as some people expect? And are you guys currently working on anything in the beverage lines?
I think you have to look at everything. And, maybe we should have bought beverage brands and, stock would have gone up 30%. But people don't like profitability and strong free cash flow guidance, apparently. But, I will say we look at everything. And it's state operations, what states aren't we in? We look at product portfolio. Beverages are tricky, right? And if you look at it, we're a 13 state operator right now. We're vertically integrated in 11 states. So you say you want to roll out a cannabis infused beverage. I mean, there's a lot of NA beers coming out there. So you partner with one. And then start to infuse it with cannabis. You have to have that operation in every single state, or you have to have a distribution facility that makes the product, and then you go to an infusing plant. It's really challenging, and so I think there's a market for it. I don't think it's quite as developed as it could be. But the demand is there. I mean, me personally, I'm 44. I'll be 45 here in a few weeks, and those beers start to hurt a little bit harder, and now you start to gravitate a little bit more towards a liquid death seltzer water and an edible, and if I could go out and a beer that's infused and it hits you the same way, and as like a light beer. There's a market for it, but we're looking at it. We haven't announced any definitive plans, but I mean, we've said this on multiple calls. We're looking at everything from an M&A perspective. We're looking at everything from a product portfolio perspective. We don't miss anything, and we won't. So we'll always be ahead of that curve as well.
Focus on execution and not headlines, right?
That's it. That's what we do. And we've said this multiple times, Shad, where we don't run our business based off dislocations in the market. I know how to run valuation analysis. I know where we're trading. I know that we're at a discount to the tier ones, and I know what fundamental analysis looks like and kind of where we should be trading. I mean, we don't care right now, and we do and we don't, right? Because we have a business to build, and we built it for this time in this moment. And if we were building it based off of trying to get the stock to a certain area, or you're trying to hit a certain margin profile, like you're just going to run your business differently. So, we work hard I just joined the board of Attach, which is the American Trade Association of Cannabis and Hemp. So I'm going to be spending a lot of time out in DC. But we don't run the business based off of any assumptions at the DC level, and we don't run our business based off dislocations in the market because we know what we're capable of. And we have the tagline, where we just control what we can, and that's really resonating in the numbers.
Don't get it backwards. Execution today creates bigger headlines tomorrow, right?
I love that. You may see that in our next earnings call, but
You
didn't patent it, so
Maybe I should have a billboard in Florida next year, dispensary, just with the logo off to the side. What do you think, brother?
Love it.
Okay, listen.
We'll go on it. So then we'll go into partnership. So there you go.
Keep in touch. This has been incredible. Go Honolulu in blue. It's less than a month before we have opening night against the Chiefs, Thursday, September 7th. We got to get together for that.
Honestly, and I mean that wholeheartedly. If you let's together, let's watch it. And the road to the Super Bowl starts in the preseason tomorrow. So let's go.
Good stuff. Listen, busy week for you, but I appreciate you checking in.
Absolutely. Thanks for having me, Anthony, Chad. Always appreciate the time, and we'll just keep operating.
Keep up the good work.
Forward to it.
All right. Thanks, guys.
What's up, everyone? So what'd you think of the interview? Are there any more questions you want us to ask that you want to learn more of? Then leave a comment below and let us know what you think. As usual, share this video with your network, smash that like button, and most importantly, subscribe to our channel because we would not be here without you. Thanks for watching, everyone.